I started my dividend portfolio with $100, and it's now worth over $96,000. But several years back, I couldn't even imagine investing that $100 because I was under a mountain of debt. But now I'm paid even when I'm not working my day job because I invest in companies that pay me a dividend. I'm sharing this with you all in hopes that maybe you'll see a little bit of yourself in me and see that you can do what I'm doing too. Because if you educate yourself just a little bit, get a system in place to start investing, you'll be able to get started on a dividend snowball of your very own. So let me share with you how my snowball is shaping up. Last month, 11 companies paid me. 4 companies from my Big Safe Dividend Portfolio, 3 monthly payers, and 4 quarterly payers, which is where I'd like to kick things off. And I'm thinking this month we'll start with Pepsi, which isn't just a soft drink company. They also delight snackers with Cheetos, Fritos, and Doritos, a delectable trifecta of salty goodness, which pairs beautifully with something sweet, perhaps from one of my other favorite companies, Hershey. I presently own 4 shares and received $5.05 in dividend income. If we look at how the start of the year is shaping up, you can see that Pepsi is up in share price by 1.1% and trades at a forward PE of 22.73. Looking at the dividend summary, you'll see 51 years of dividend growth, a 5-year dividend growth rate of 6.63%, and a dividend yield of 2.95% based on the share price right now. And Pepsi has a 10-year total return of 185.34%. Next up is the newest addition to my portfolio, the Schwab U.S. Large Cap Growth ETF, or SCHG. Right now it's trading for $86.45, and year to date it's up in share price by 4.21%. It is an ETF, so there is an expense ratio associated with it, and it's at 0.04%, so it's pretty low considering. And the 10-year total return for SCHG is 322.91%. Next up is TD Bank, or the Toronto Dominion Bank. Ticker symbol is TD. And I did make a decision recently to sell out of this position because I'm working to better streamline my positions overall. I did have 44.5 shares and received $33.88 in dividend income. If we look at the last year, they're down in share price by 12.06%. And for the first month of the year, they continue their downward trend of 6.31% in share price depreciation. The forward PE is 10.24. In looking at the dividend summary, we see 9 years of dividend growth, a 5-year dividend growth rate of 7.03%, and a dividend yield of 4.78%. And the 10-year total return for TD is 104.41%. The largest dividend payment I received last month came from Altria Group, and the ticker symbol is MO. I currently own 170 shares and received $167.32 in dividend income, which allowed me to add 4 more shares. I don't know about you guys, but seeing and receiving dividend payment that equals more shares is pretty exciting. And it really makes me feel like the dividend snowball is starting to gather more mass and is rolling. It's very exciting. At any rate, Altria Group in the last year is down in share price by 12.24%. And if we look year to date, they're actually up a little bit by 3.42%. The forward PE is 8.24. Check out those dividend grades. And in looking at the dividend summary, there are 54 years of dividend growth, a 5-year dividend growth rate of 5.06%, and a dividend yield of 9.4%. And in the last 10 years, the total return is 116.2%. Do you love big safe dividends? Me too. And that's why I started my Big Safe Dividend experiment back in July of last year. I created a separate slice in my Hopeful Investor M1 pie using the framework from the little book of Big Safe Dividends by Charles Carlson with my own added twist. I'll link to the playlist in the comments if you want to check it out and see the method to my madness. But in the last month, I actually received dividends from 4 of the 18 holdings of the Big Safe Dividend slice. The first of which is Lincoln Electric Holdings, or LECO. LECO is the ticker symbol. I currently own 0.63 shares and received 39 cents in dividend income. But if we look at them in the last year, you can see that they're up in share price by 33.16%, and checking out year to date, we're up 3.84%. Forward PE, a little bit on the higher side at 24.72. But look at those dividend grades. And if we scroll down a little further and check out the dividend summary, you'll see 22 years of dividend growth, a 5-year dividend growth rate of 9.91%, and a dividend yield of 1.26%. But they've got a 10-year total return of 288.98%. The next company to pay me is Steel Dynamics Incorporated. Ticker symbol is STLD. Right now, it's trading at $119.79. In the last year, it's down in share price by 4.41%. And year to date, they're up by 1.43%. Forward PE is 12.32. And if we check out the dividend grades, pretty solid overall. Scrolling down, looking at the dividend summary, we see 11 years of dividend growth, a 5-year dividend growth rate of 17.78%, and a dividend yield of 1.42. But fear not, because the 10-year total return is 822.17%. Next up is Intuit Incorporated. Ticker symbol is INTU, presently trading at a whopping $632.86. I currently own 0.27 shares and received 23 cents in dividend income. In the last year, they were up in share price by 45.3%. And looking year to date, they're up by 1.25%. The forward PE definitely on the higher side at 38.61. And checking out the dividend summary, we'll see 12 years of dividend growth, a 5-year dividend growth rate of 14.33%, and a dividend yield of 0.57%, and a 10-year total return of 865.76%. The next big safe dividend portfolio payment came from Nordson Corporation. The ticker symbol is NDSN, presently trading at $257.36. In the last year, Nordson Corporation was up in share price by 4.61%. And looking year to date, you can see they're down in share price by 2.57%. They traded a forward PE of 27.35. Right now, I own 0.58 shares and received 32 cents in dividend income. Some solid dividend grades overall, of course, with the exception of that dividend yield, but there are 59 years of dividend growth. The 5-year dividend growth rate is 15.4%, payout ratio 29.16%, but again, that dividend yield is only 1.06%. And the 10-year total return is 312.73%. Now, I know that these are tiny little dividends. They're tiny. I get it. But I'm working to grow these positions in the big safe dividend portfolio because I think overall it's doing pretty well. And let's look at that again because it does bring me a little bit of joy. It's only $3,000 of my whole portfolio, but my all-time total return is 16.17%. So I don't think that's too shabby. I'm pretty happy about it. At any rate, this brings us to the monthly payers in my portfolio. And we'll start with Main Street Capital, which has been an absolute champion for me in the last year. Not only did I receive monthly dividends, but last year there were 4 special dividends, 1 per quarter. So I'm pretty excited to see what the year ahead's going to bring us. Before I dive into Main Street Capital, if you want to learn more about business development companies and specifically Main Street Capital, I'll link to a recent video I did in the comments. I currently own 131 shares of Main Street Capital, and I received $42.32 in dividend income. In January of last year, I pulled in $26.88 in dividend income. So I'm pretty pleased with how this income has continued to grow. And I would like to point out that I received $42.32, which is almost 1 full share. Imagine if I can get a whole new share every month. I think I'm right on the precipice of being able to do that. At any rate, the income is continuing to grow. You can see in the last year, Main Street Capital is up in share price by 15.9%. In the last month, it's up 4%. Forward PE is 10.86. Looking at the dividend summary, we've got 2 years of dividend growth, a 5-year dividend growth rate of 3.71%, and a dividend yield of 6.41%, and a 10-year total return of 188.31%. The next monthly payer I received a dividend from last month is none other than Realty Income Corporation. The ticker symbol is O. They had a bit of a rough year in terms of share price. Last year, they were down by 18.63%. When we look at the start of this year, they're down 3.78%. The price to funds from operations is 13.43. And I currently own 145 shares and received $26.65 in dividend income. Seeking Alpha is still given some pretty solid dividend grades, as Realty Income has 26 years of dividend growth, a 5-year dividend growth rate of 3.66%, and a dividend yield of 5.57%. But here's where Realty Income is not as impressive, and that's on the total return side. 10-year total return, 120.71%. The next dividend I received came from the JP Morgan Equity Premium Income ETF, or JEPI. Currently trading at $56.25, JEPI was up in share price by 2.2% in the last year. And in the last month is up 2.31%. This is an ETF and does have a little bit of a higher expense ratio at 0.35%. And the amount you receive each month does fluctuate. Right now, the yield is 7.96%. And I did change this to look just at the last 3 years because it's only been around that long. And Jeppy has a 33.49% total return as compared to the S&P 500 in the last 3 years of 30%. And with that, my total dividend income for January is $299.61, just under that $300 mark. That kind of makes me a little crazy. But at any rate, in January of last year, I only received $269. So I'm up in dividend income by 10% over last year. So I'm pretty happy about that as well. Now, my goal for the year ahead is to try to get to a projected annual dividend income of $6,000. And right now, I'm sitting at a projection of $4,491.18. So I've got to find a way to come up with just over $1,500 more by the end of this year. I hope I can do it. So lay it on me. Tell me 2 things. How much dividend income did you guys pull in last month? And what's your projected annual dividend income for the year ahead? Now, if you're just getting started, check out my dividend investing strategy video. Or if you're looking to learn what metrics are important when reviewing stocks for a potential place in your portfolio, take a peek at this video next, where I outline 3 key metrics that you should be paying attention to.